and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Tuesday, April 18th, 2023, and I'm pre-recording this Trading Places Live for just a little bit later this morning. Currently, futures are up quite a bit, or I should say decently. Dow futures actually only up 39 points, but the S&P 500 futures up 17, NASDAQ futures up almost 100. So on a percentage basis, NASDAQ looking to get off to a pretty good start on a relative basis. Crude oil prices down fractionally, back down to about 80.5 per barrel. And the U.S. 10-year Treasury yield down a little over 1 basis point, back to about 3.58% this morning. Taking a look at the agenda for today, we're going to start off with daily market recap. Then talking technically, I'll do the chart of the day. Going to take a look at small caps there. International ETFs, earnings spotlight, and the 3 you must see. So we got a pretty busy day. So let's go ahead and jump into it. We'll start off with that daily market recap, where we saw yesterday the Dow Jones Industrial Average finish up 100 points, which was 0.3%. S&P 500 up a little bit more than 13 points, 1/3%. And the NASDAQ up 34 points, which was about 0.3% as well. So all of them up about the same amount. Mid caps, though, up 0.75%, jumping 19 points. Small caps up 0.6%. It was up 7 points on the day. And looking across at the bottom here, the AD lines on each of these indices continuing to move higher. Mid caps, even though we're well off that prior high, getting close to another new high, which I find very bullish there. The only one that maybe is a little weak is the small caps, but small caps have been the weakest index and still well away from that high that it saw back in early February. Not a whole lot of movement needed to get back to the all-time high, though, in the AD line. So I think all of the major indices do appear that they are still under accumulation. I find that to be a bullish signal. Among sectors, real estate up 83 cents. That's 2.25% yesterday. Financials, 38 cents. That was a little bit more than 1%, 1.16%. Industrials rose about 0.8%. And discretionary up 0.7%. The worst performing group yesterday clearly was energy, which was the only group to trail by or to lose more than 1 percentage point yesterday. And as I look across the AD lines on all of these indices or all of these sectors as well, very, very strong. I don't know what to say. I feel like from my vantage point, it looks like the market wants to keep going higher. It looks like Wall Street has been using the last several months, 8, 10 months, 11 months to accumulate stocks. And I think we'll find out the result of that down the road, which I believe will be higher prices. Looking at the 10-year Treasury yield, well, as we look at this chart, I can tell you March housing starts will be out this morning. Their estimate is 1.4 million units. February was 1.45 million units, so we are looking for March to drop a little bit. March building permits also expected to decline a little bit more on a percentage basis. February was 1.52 million units, and we're expected to see that drop to 1.44 million units. So that's really the only significant economic report out today. Tomorrow's pretty light as well. We will get the beige report out tomorrow, the beige book. Otherwise, though, pretty light in terms of economic news. We're starting to see the earnings, however, pick up, and that will continue throughout the next 3 to 4 weeks for sure. But looking at the 10-year Treasury yield, I'm kind of watching right around the mid 360s. We took out that 20-day. So now I think we're kind of trapped here between the 20 and the 50 until we make a break one way or the other. This has been pretty typical behavior over the last 5, 6 months, where we've seen a lot of movement below the moving averages, back above, back below, back above, back below, now back above again. This is kind of the hallmark of a trendless, in this case, yield. So we're just kind of going back and forth. I'd say maybe there's a little bit of a short-term bias as we look back at the highs and we look at the lows. Does look like there's a bias to the downside, but it's certainly not a steady downtrend, not like it was to the upside back in August through November. You can kind of see that that was staying well above the 20, which remained above the 50. That's the definition of a trend. Not really seeing that right now. When your moving averages keep crossing and you keep moving above and below, that's more of a trendless kind of a market. So not a whole lot more to add there. Let's move on to talking technically. I always like to take a look at the S&P 500 and the NASDAQ 100 here. Another strong finish yesterday. That's the reason why we keep seeing this AD line moving up. You can see 2 of the last 3 days, hollow candles finishing right on the high. And then even on Friday from last week, we saw, maybe a little bit more volatility, but we closed in the middle of the trading range. So that doesn't really hurt you from an AD line perspective. The closer you finish to the upper end of that day's trading range, that's going to have the most positive impact on the AD line. And the further you finish toward the bottom of the trading range will dictate the movement to the downside on the AD line. So what this tells me is that we're getting a lot of afternoon buying. And I mean, you can look back and see in this uptrend, a lot of hollow candles where we're closing at or near the highs. Very, very few filled candles. We got one right here back in, looks like March 22nd, where we finished on the lows. We saw a couple back in earlier in March. But for the most part, we're going higher and finishing near the highs of the day. We're at the highs of the day. And that continues to be bullish. Short term, however, we do need to clear 4,200 and then 4,300 is the big one after that. The NASDAQ 100 looks to me to be in better shape, only because we have taken out that early February high. We continue to trend above the 20, which is above the 50. I mean, even if you're bearish in the long term, I would respect this short-term uptrend until it's lost. The 20-day moving average is the first area I would look for to the downside. And then, of course, the 50-day would be the next. But I believe we're heading back up to challenge this 13,750 level. Those of you who follow my work know that the first half of a calendar quarter tends to be much stronger than the second half. So in other words, the first half, which includes the lead up to earnings and then the actual earnings themselves, the market tends to do pretty well. And then once all the earnings die down, the news kind of subsides. That's when we can see a little bit more in the way of a pullback. As I look ahead in 2023, that's what I see here. I mean, right now, I think we look pretty strong technically. And so I would expect that we have a much better chance of going up to challenge this high than we do going down to challenge the recent low and the 50-day moving average. But we'll see where we go. That's just my opinion. Moving on, let's take a look at we'll do the chart of the day. For those of you who like the chart of the day or like seeing a chart, educational, maybe a potential trading opportunity, I would point you over to earningsbeats.com. Scroll down. We have a free Earnings Beats Digest newsletter. All it takes is the name, email address. Hit that subscribe button. We'll get you set up. 3 times a week, Mondays, Wednesdays, Fridays, we come out with that chart of the day and provide you. It's usually 2 paragraphs in a chart, so it's a very quick, easy read. But it does usually have some educational material in it, trying to help folks who are wanting to learn more about trading or maybe just hone in your own personal skills. Maybe there's something I can offer that might help in your trading. That's what we do with this. So if you want to become part of this Earnings Beats Digest, receive your chart 3 times a week, Monday, Wednesday, Friday. Again, all it takes is a name, email address, hit that subscribe button. So what do we got for today? Well, I've shown this chart a few times. I don't remember if I've shown it on this show. If I have, I apologize. I do shows here. I do shows over at Earnings Beats. I do articles. I write reports to our members. It's kind of hard to remember what chart I've reported and talked about where. But if we're going over this for a second time, probably worth it. Small caps have been lagging. I think if you follow the market fairly closely, you probably are aware of that. Only thing I want to say is I think right now we're looking like we could be breaking out of a bottoming structure. And if you just go back and take a look at this, that, this, that, and so far this, I think you'll see a lot of similarities. I mean, here we're breaking out above prior price resistance, clearing the 20-day, and then we take off. And this one may be a little bit more muted than some of the others, but we have a nice little rally. Here, rally, come back down, test again, double top, come back down, and then break out. Take out that price resistance. In this case, take out the 50-day, and pretty nice rally there that follows. Here, reaction high, double bottom, double top, pullback, boom. Getting back through the double top, also through the moving averages, we hold, and we make a decent run to the upside. End of December, early January, move back. There's your reaction high, double bottom, double top, pull back, boom, and out we go. Here, what we're in right now, we pull back. There's your reaction high, actually a little bit lower, slightly higher, move there, higher low, and now here we are again, ready potentially to make this break. If we do, you can see what history has told us. This is just over the last year. You go down, you consolidate, you break out, you have a run. You have a run, you have a run. There you have a slight run. So I think this is a group that while it's been lagging, we might actually see a little leadership from small caps, maybe mid caps as well, as we move forward, based on the fact that it has been consolidating. It's right on the verge of a breakout. With futures green this morning, we could see a move up, a gap up, and maybe we just gap up and run. That's what we did over here. We gapped up, we ran here. We were closing at the bottom of this red candle. We gapped up, we ran. Here, we had a slight gap up, we ran. Here, we had a gap up, we ran. Today, it's looking like a gap up, and it looks like we could get through resistance on the IWM. So this is an area that I think looks pretty interesting. Those of you who see the breakout and are interested in it and like to use leveraged ETFs, then I think the TNA is something that you might consider. Just remember, it is leveraged, so you can lose 3 times your money as easily as you can make 3 times your money if it's wrong. But this, if the IWM makes that breakout, this tracks the Russell 2000, which the IWM also tracks the Russell 2000. So that breakout could result in a really nice move here in the TNA. Just wanted to point that out. All right, next up, I wanted to take a look at international ETFs. I haven't really looked at the international markets much. I've been concentrating a lot with trying to study the S&P 500 and the indices here in the U.S., but I thought I'd take some time and just look at what's going on. This is a 5-year weekly chart. This is the EWG that tracks the German index, so it tracks the DAX. Clearly downtrend in play through late September, early October, kind of like we saw here. But since then, it's been straight up. We continue to see very, very strong positive action on the EWG. We've got action taking place above the 20-week, which is above the 50-week. I think the EWG looks really good here. Let's see. Next up, how about EWH? This is Hong Kong. So there is your selling. It actually started back in the middle part of 2021. So it topped earlier. It bottomed just a little bit later. It was actually late October, but a huge run. I think it's got an upsloping neckline right here, equal shoulders, and it's starting to move again. So I see a bottoming head and shoulder pattern, and with that upsloping neckline, I think if you clear that 2250, 2260 area, that would be very bullish for the EWH. FXI. So now let's move on to China. This is a large cap ETF in China, but there's the top here all the way back at the beginning of 2021. Went down and closed at the, bottomed at the end of October. So very similar to the EWH. Has come back up. We have a slight downsloping neckline on this one, though. Could not clear the June 2022 reaction high. So we'll see if we can get back through. I think we need to clear both levels. I'm going to annotate this one because you got to be careful, I think, on downsloping necklines. And this one doesn't downslope much, but a little bit. And the reason is, if you're looking at this neckline, it's possible you could break this neckline, possibly even break this price resistance, but not break this one. And this is the more important one. So I always like, even if I use this as a head and shoulder bottom, I want to take out this high over here. So I'm looking more for like $33.75, $34. I'd feel pretty strong with that kind of a move. Just be careful. You get up through 33, you might be starting to clear the neckline, but you still got to get through this price resistance level. So keep that in mind. Here you can see the left shoulder, right shoulder. There's the head. Rather symmetrical. We're seeing a lot of these patterns that have either executed or are on the verge of executing. Potentially, maybe I should say, potentially could execute, may not execute. Next, EWJ. This is Japan. Another one that bottomed in October. Nice reaction move back up, taking out the August reaction high. This reaction high was very similar to what we did here in the US. Had that bottom in June, had a big run. Our run probably was much bigger on a percentage basis than the EWJ was back then. But after a move lower, setting that low in in October, we've come back up and we've gone back through the August high. So far here in the US, we have not, at least not on the S&P 500. Still got a little work to do even on the NASDAQ, which has been leading. But the configuration here, I think, looks really good. We've got this move up, got the pullback, testing the 20-day. We've been continuing to hold it, moving higher. Looks to me like we're ready for another breakout on the EWJ. Next up, INDA, INDA. This is India ETF. This one remains in a downtrend. We just recently, at the beginning of March, put in a new low from the downtrend that was back, started back at the end of 2021, beginning of 2022. Went in and put that low in June, moved back up. We've actually gone down here in 2023 and put in a new low. So this is one of the last to recover at this point. So not really a big fan here. I'd like to see the downtrend break, the series of lower highs, lower lows, and we're still deeply in that pattern, trading below the 20, which is below the 50. The PPO is negative. This is one of the more bearish looking international ETFs. EWP, looking at Spain. Look, check out Spain. Off of the October low, we're all the way back up to the high that was established back in early June 2021. I'm going to actually take this back a little further. Let's go back 10 years. Because there's the high of 29. Then we had the high up here, 31. All the way back in 2014, we had a high above 32. So 32, then 31. Here's 29. We're back up against that level. That's been a massive rally, 50% since the October low. So Spain's been very hot. I think continues to look solid, but I would want to see that breakout. I mean, if I was in the EWP, probably would be taking my profits until I can see that breakout. All right, next up, EWU. This is the United Kingdom. And another big move up, September, October, all the way back up, testing the February high, which obviously on this chart was a very significant high. Breakout above 34 is what you want to see. Really nice looking chart, though. We're seeing a lot of this from around the globe. It's not just the U.S. I've been talking about a bottom in the U.S., the fact the market's been rolling. off of the double bottom, really, that printed in June and then again in October. There's actually some areas of the world that are outperforming the U.S. Look pretty strong. For the first time in probably a decade, I think it's worth looking at some of these international ETFs, maybe diversifying a little bit into some of these, because some of them are outperforming the U.S. Last one I wanted to show you is the EEM. This is the emerging markets. Big drop from the beginning of 2021 all the way down to the October low. We did rally. The recent low here at 37, you can see that was the first reaction low in November. That really needs to hold, in my opinion. If we see this drop below 37, likely heading back to 33, or at least the odds increase significantly. But right now we have bounced off of it. We're back above the 20, above the 50. The PPO looks good. So I'm going to give this one the benefit of the doubt and say we go higher and go back up and challenge the January high around 42.5 or so. But watch 37. That would be my line in the sand to the downside here. All right, next up, let's move on to the earnings spotlight. I do want to say, first of all, that I saw 2 companies miss last night after the bell. JB Hunt and Equity Lifestyles, or Equity Life, ELS. But let's take a look at these. JBHT, I looked at this a little bit earlier. Let's get the latest. Down 2% after they missed their earnings. They were expected to come in $2.04. They came in $1.89. And then ELS, Equity Lifestyle Properties. Not showing any kind of movement yet, but they did come up 2 pennies short. 74 cents versus 76 cents. 3 smaller banks reported, so I thought maybe we'd take a look at those. I think the bank's going to be very interesting throughout this earnings season because of all of the issues that we just went through over the last month, a couple of bank failures. What kind of contagion might be out there, we're probably going to find out as earnings are being released in the banking space. Most banks report over the next couple of weeks. Usually by the end of April, banks are done, or most of them are done. They're normally the first to report earnings. So PNFP down a little bit. They actually beat $1.76 versus $1.74. SFBS, they beat $1.06 versus $1.05, down slightly pre-market. FBK, 76 cents versus 74 cents, down 5%. One thing I was talking about with members last night, we had actually it was open to the public as well. We did a Q1 earnings sneak preview, and I showed some companies I thought have performed really well over the last couple of weeks after reporting earnings. Looked pretty strong. And then I looked ahead. And one thing that was pretty clear to me is that some of these banks have bounced on an absolute basis, but they haven't bounced on a relative basis. In other words, they're not getting any love from Wall Street. So as they report their earnings, it could be the top. We could see another rollover in some of these smaller banks. Be really careful, I think, with the banks. Anyway, FBK down 5%, even though they beat on their bottom line. Now, reporting this morning, all of these companies I looked at beat estimates. Johnson & Johnson. And when I talk about estimates, I'm talking only about earnings. I have not seen revenues. But they had an easy beat, $2.68 versus $2.51. Stock up almost 1% this morning. Bank of America, 94 cents versus 79, up a couple percent there. Lockheed Martin, this was one I talked about last night. I really liked. I thought it would come out with a nice report. And they posted earnings of $6.43 versus $6.07. Stock up 1%. Goldman Sachs, I'm showing earnings ahead of estimates, $8.79 versus $8.14. Stock down 3%. BK, which is the Bank of New York Mellon, they beat 113 versus 109, down 0.4%. ERIC, which is Ericsson, they beat 8 cents versus 4 cents, stock down 4.5%. And last but not least, Commerce Bank shares, 95 cents versus 92. and the stock up 1%. The stock really looks bad to me, though. I'll be, maybe we get a relief rally up to the 20-day. I'd be very careful with the stock, though. Later today, we'll get earnings results out from Netflix, Intuitive Surgical, Interactive Brokers, Omnicom, UAL. So United, we got some big ones coming up after the bell. Earnings will continue to accelerate. All right, 3 you must see. I'm going to go first with CSX. The reason I'm bringing this one up is it's a leader in the railroads. Railroads, you can see, have been very weak. This is the absolute chart of railroads, but CSX has been a leader. What's going to prevail? Are the weak railroads going to take CSX down? Or maybe can one of the strong railroad stocks start to pick up railroads? I don't know, but this will be an interesting one to watch. Next up, wanted to show DHI. This is DR Horton, a home builder. AD line remains strong. It's pulled back a little bit, but home building's been very strong. DHI, though, on a relative basis, has been pulling back. Most of this has been occurring since the top in February. Can we break out? I think we can. This relative strength has been weak, but I wouldn't be surprised to see it pick back up. The last one I want to show you is one stock I would avoid. This stock has just been a train wreck. No pun intended with the railroads I just mentioned, but it really has been a train wreck. Maybe we get a little bit more of a relief rally, but I would be careful when they come out with earnings. AD line weak, price action weak, relative strength horrible, and their group absolutely awful versus the S&P 500. All right, that's it for me. Listen, everybody have a great day. Happy trading, and I'll see you back over at Earnings Beats tomorrow. Happy trading, everybody.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.